Good morning, everyone, and welcome to the European crossover webinar. Hang on, I'm still trying to get everything loaded up. Apologize for the delay. Ran into problems with my book map and kept logging off. I have to shut down the Reuters. Hang on one moment. Anyway, I saw when I got up there was a couple of two times the system disconnected, and I went down to go and get some coffee and came back up, and I'll be doggone if it didn't do it again. I thought, you know what, it's going to have to do a full reboot of the system. Loading everything right now. Nonetheless, I still lost data. Here's the S&Ps. Hang on a moment. I got to... What a Friday. Doggone. Hang on. Doggone it. Love God, I swear. Okay, there we go. Looks like what do you call it? Still saved it off of the server or whatever you want to call it. But anyways, trying to load it up. I have to do that with everything now. Bear with me, apologize. Hang on, just trying to get everything. Oh, I haven't loaded up the news. I mean, I have the news, but I haven't loaded it. I've got to get that going. Hang on. Apologies. Let's go and quickly jump into the FX portion. Got too many programs to load up. So when I do this full reboot, it really throws me off because then I had to load up Live Squawk. So hang on. Let me get the news loaded up. I already did the stories. I just don't have the... Let me get those popped in. I'll be doggone if it's not one thing, it's another. We did see a pretty good sell-off here in the dollar. We're going to move into the euro. You can see the euro still up in the sky. Although it has come down from those high levels. I know DK was able to cover for a good 50 pips on a portion of his position, which is great. Let's go on and move in. Oh, yeah, let me pull up the calendar. Let's see where we stand. I got Reuters back up. Hold on. Hope it didn't take too long to load up the calendar. Okay. Whew. Amazing. Something loaded up fast. Okay, so here we are. No data until at the top of this next hour. We have can't even talk. Italian manufacturing business confidence. And then nothing until 8:30 Eastern, which is going to be personal income and spending, core PCE. But once again, a lot of this doesn't, look at this February. This is, if you saw George Perk's interview with Anthony Crudele, he was saying, hey, you can, this next week, meaning this week, you can throw away practically all the data because it's not going to be impacted with the coronavirus. So, you're looking here into February. The data following after that, they won't start to see some of that. So a lot of this, with the exception of jobless claims, which is a big one, yesterday, all this other data is you can throw it out the window. University of Michigan, there might be some change there, but we do have that at 10 a.m. Eastern. And that's going to be it. So coming back here at the top of this next hour, well, actually, we've already had French consumer confidence, which came in, that's a bit odd, came in at 103. Reuters polls for 92. Certainly, I don't think that was impacted. It does say March. But we do have at the top of this next hour, Italian manufacturing business confidence, as well as consumer confidence, and then Mexican trade balance at 8 a.m. Eastern, and then 8:30 Eastern, personal income and spending, core PCE, and University of Michigan final reading at 10 a.m. Eastern. Let's move this out of the way. Whew. Try and get everything started again. Okay. Drink of water. Excuse me. When I went down to get the coffee and water, came back up. That's when I realized the bookmap was cutting back out again. News. Okay, hold on. Excuse me. And boy, we saw a pretty good run up here. Well, you can see this is the Kiwi, but in the Aussie. So let's touch on those. Just two stories. Aussie and New Zealand dollars get a reprieve as the U.S. dollar falters. The Aussie and New Zealand dollars were boasting their best weekly performance in 8 years on Friday after dire U.S. jobs data, another pledge of unlimited easing by the Federal Reserve, undermined their U.S. counterpart. The Aussie was up at 66.06, having rallied all the way from 58.70 from the low on Thursday that left it with gains of 4.4% for the week so far, its best showing since 2011. Resistance is just ahead at 60.88 with another layer at 61.50. The swing was quite a turnaround. For just a week ago, carved out a 17-year trough at 55.10 as global markets were into meltdown. The New Zealand dollar vaulted to 59.60, having been down as far as 57.79 at one stage on Thursday. The rally came as a staggering spike of 3.8 million in U.S. jobless claims led Fed Chair Jerome Powell to promise the bank would lend aggressively to cushion the impact of the U.S. coronavirus. The Fed's unswerving commitment has boosted equities globally and eased liquidity strains in debt markets, in the turn aiding risk assets, including the Aussie and Kiwi. The grim economic news that will continue to unfold in coming weeks is, we can conclude, largely discounted, said Ray Trail. Monetary and fiscal policy supported be meted out in ever larger quantities is currently in the driving seat for markets. The improvement in risk sentiment this week is seeking the air come out of this month's dollar rally. At times, both the RBA and the RBNZ have been busy buying government bonds to lift liquidity and keep yields low. The RBA on Friday offered to buy another 3 billion Aussie dollars of government paper, bringing purchases up to 16 billion Aussie dollars since the start of the program on March 20th. The RBNZ on Friday said it would buy 1.3 billion of New Zealand government paper next week, almost twice the Kiwi $750 million it had initially signaled. All this buying has helped the Aussie 3-year bond yields down at 0.3%, just a whisker above the quarter percent cash rate. Bear with me, still trying to get everything organized. Okay, the dollar pulls back as risk ebb, set for the biggest loss in a decade. The dollar was on track for its biggest weekly fall in more than a decade on Friday as a series of stimulus measures around the world, including a $2.2 trillion U.S. package, helped temper a rout in global markets triggered by the coronavirus pandemic. An unprecedented jump in U.S. jobless claims on Thursday underscored the virus' devastating impact on the economy, but a subsequent bounce in Wall Street shares raised hopes that a torrent of selling risk assets may have run its course. That eased a run on the dollar since last week, with many market players, from leveraged investors who face margin calls to avoid forced selling to companies hoarding dollars to brace it for a recession, feeling less need for the currency. The dollar fell about 1% to 108.57 yen. This was huge. And boy, we were on the cusp of this starting to potentially break out. I guess anything can still happen. I mean, the concern is that things can spin out of control for the BOJ, but we'll see what happens. But certainly we've seen a big, huge pullback in the dollar yen, due largely to Japan's repatriating funds ahead of their fiscal year end in March. The number of Americans filing claims with unemployment benefits surged to a record of more than 3.28 million last week as strict measures contained the coronavirus pandemic unleashed a wave of layoffs. That eclipsed a previous record of 695,000 in 1982 and was up 3 million from last week. Until last week, we had been fussing over the difference of tens of thousands in this data. What we can say now is basically markets have factored into the fact that the economy will be hit hard, Kazuki Kaida of Foreign Exchange with Street Bank. It helped the U.S. Senate has passed a stimulus. There appears to be no repeat of the nightmare during the previous crisis. He said, referring to the market shocks after the U.S. House Representative voted down an emergency financial bailout in late September 2008 following the collapse of Lehman Brothers. Well, that was really because of the Republicans back in 2008. If some of y'all don't remember, it's actually the Democrats that actually had to save the country along with Obama because, like I said, Republicans weren't even voting for that bill. I mean, it was just really a mess and really actually saved the economy from sliding even further, potentially into a depression. But we're seeing a bit of a change, on this run here that we've experienced now. So far this week, it is down 3.1%. If it's sustained by the end of the U.S. trade, that would mark the biggest weekly decline since 2009, underscoring the currency market's extreme volatility after last week, racking up its biggest weekly gain since the global financial crisis more than a decade ago. The dollar funding squeeze in interbank markets has abated considerably this week. Currency-basis swap spreads, the premium investors pay or need to pay over interbank rates to fund dollars through foreign currency swaps, have fallen considerably. Even the dollar-yen basis, which stayed elevated until the middle of the week, has dropped within 3-month spread now at 40 basis points, compared with a high of around 140 basis points last week. Highly choppy currency trade could continue until the end of the month when there tends to be large flows from corporate and investors to hedge their currency exposure. In particular, many asset managers may need to adjust their currency hedge positions after wild swings in global share prices. The dollar rises until last week, particularly against the Aussie and the Kiwi, were primarily driven by such currency hedge adjustments. We can still believe that we are in an extremely rocky ride in the currency markets between now and month end. Some will not yet have adjusted, and some will now find themselves under hedged given the big equity reversal so far this week. And some may be looking to implement changes to strategic hedge ratios at the same. Buckle up. Mexican peso dropped 1.5%, giving up a recovery of this week after credit ratings agency S&P on Thursday cut Mexico's sovereign rating to BBB from BBB plus in anticipation of an economic hit from the coronavirus and a plunge in oil prices. Bear with me. Still trying to clear all this stuff up. So with that said, let's go on and move on to the equities. We'll take a look at where we stand right now. I had gaps in data. Fortunately, it looks like it saved it off of the server, I guess, with it's Rhythmic that I use as the data provider. Which, if you use Bookmap, this is the premier service to use, is Rhythmic. Very, very fast data. But look, now I don't have the gaps. So when I restarted the program, doggone it, I spoke too soon. Yeah, it still has those gaps right there. But I'm saying when pulling off my thing. But anyway, you can see those multiple gaps. And then it happened again, which is just frustrating because I use this, but this was at the close, so that's understandable. But you can see these gaps right in here. It doesn't look like much, but actually we spread it out, and then it did it again right before I got ready to come on air. But anyway, let's take a look where we stand here. So we did see a rally back up. A lot of people were looking for 2620. We did make it to 2620. I think made it to 2627, or 2632. I think it was. You can see here, and then we had a hanging man, and then you can see it doesn't look like much, but we paired off quite a bit, about 60 handles. Okay, for a minute I thought I lost my 2-hour charts. Here's a 30-minute. Same thing, a hangman here also in the NAS on the 2 hour. Same thing here, hangman here in the spoofs, but still quite the rally back. Holy smokes. But everybody, a few people I noticed were noted in about 2620. So we did make it up there. I didn't think we'd come back this far this fast, but yesterday was a wild day, as y'all can remember. Anyway, this is frustrating, these two gaps in here, because obviously, I mean, I guess it would, I mean, I don't have a gap here, so at least fortunately I didn't lose it. It was in the book map. Let's go and move into the analysis. So the euro staged a strong rally surging beyond the weekly level of 1018. Resistance on Friday will be 1066, well, we've even got all the way up, followed by 1095, where you can see they made it up to 1095, almost 1095. So it's going to be 1095. You see that? Support is going to be 956. So 1095 here. Hard to say that it's bearish, but then again, hard to say it's bullish either. It's just been a reprieve. So tell you what, we're still going to keep it as bearish. It's been a heck of a rally back. Let's take a look at it on the fib. Oh, it got past just the 50% here, 1065. So 1095 and downside is going to be 956. We're right here at 1020. Let's go move into the cable. So the cable surged to 2215, which is a 38%. You can see that there. Amid dollar selling, resistance will be 2271. And you can see it even went past the 2271. So it's going to be here at 2285. Bear with me. So right here, 2285. I thought this was going to hold it right there. That's why I came up with 2271. This little medium-legged doji, that's 2271, but I had this level. But we'll go with this 2285. They did make it up there. Hold on. Support on the other hand is right there, 2156. Okay, looking at the Aussie dollar. Aussie joined the parade, rallying against a buck to 60.83, which is a 38.80%. Can't even talk. Doggone. 60.83, which is a 38%. The pair will find resistance at 61.38. Support will be 60.38, 60.33. So I said 61.38. Looks like we came up just shy of that. Made it to 61.29, and we had 61.38. That'll still be it. And support will be 59.97. 59.97. Let's move into the Kiwi. The Kiwi furthered its advance, nearly challenging 60 cents. Resistance will be 60.07. Looks like we made it just beyond that. High was 60.17, so we had 60.07. Support will be, resistance will be 60.07, followed by 60.45. Support will be 59.15. So 60.07 will still hold. We did take it out by an extra 10 pips. And support 59.15. Looking at the dollar CAD. The dollar CAD resoundingly broke 42 cents, nearly reaching 40. Support will be 39.62 with resistance at 40.96. I'm just going to move into the peso. The dollar peso fell to support level 22.85. We already had that marked off. It went right down there to the pit. But you can see where you can see the touches. You can see the how I came up with that level. I mean, you can see right there, you know, here, 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 and here. So that and they went right straight to that 22.85 like a magnet and popped right off of it. So dollar peso fell to support level 22.85 after two strong sell-off days. Resistance is going to be 23.35, which we've actually rallied above it, almost up to 23.44. So we'll keep the 23.35, followed by 23.60. Support will be 22.48. Well, this is still holding here. So we'll keep, what we'll do is actually, you see just this close here, that open, and that close right there. So it's going to be 29.20. I mean, 22.90, apologize. 22.90 is going to be support. And resistances we're looking at is going to be 23.35, although it did get beyond that. Looking at the dollar yen, this was up in the stratosphere. This was just something else. We had a long-legged doji here, then almost like a hangman, then definitely a hangman, then a spinning top before we finally broke lower. The dollar yen broke lower, taking out the pivot of 927. Support is going to be 841. Well, we actually went below 841 just a bit, followed by 808. So we got as low as 823. So we had 841. We'll stick with the 841. And resistance is going to be 896, followed by, there's the 896, followed by 927. So we'll go with the 896. Of course, we know the importance of the pivot, 927. That pivot's been around for a long, long time. See how long that 927's been around. On to the cash dollar index. The dollar index flushed over the last 2 days, taking out 100. Resistance will be 99.82, followed by par 40, and support's going to be 98.80, followed by 98.57. So 98.80 on the downside, 99.82 on the upside. Let's go move into the cross rates. It's really frustrating to lose that data on the book map because it wouldn't be a big deal, but obviously it looks like they had put in a low and then they bounced off of that. And not to have that data, it really ticks me off. So looking at the Kiwi yen, we already had a pretty good little run here. Now we kind of eased back a bit here for this today. Okay, so we stayed within the confines here on this upside. We had 65.07 and we pushed right here's going to be the resistance right there. You see that coming across? So it's 65.56. With support going to be right there. 64.02. Let's take a look at the euro yen. You can see here we did have this hanging man. We've seen the euro and the yen strengthen. So resistance now, and this might even be a stretch up here, 2054. Let's take a look at the intraday. It's going to be right there, 2030. Support's going to be right there. See, right coming across here, 1943. Going to the euro odd. I think this is going to be evening up today. And even then, you can see, look at this tight range. You see here? Very, very tight. Let's go move into the TR, see if we can find something. That's going to be resistance right there. So it's going to be 83.39. Right there's going to be support, 79.97. That's still pretty wild. That's still pretty big range. It's caught right there, 80.08. Still big. Look at the Kiwi right here, Euro Kiwi. Same thing, very, very tight range this morning. I don't really expect any big changes. So resistance is going to be right there, 88.52. I'm positive it's 86.52. The support coming in right there, 83.92. Let's go into the ASEAN. Well, we got a bit of a, yeah, a little bit of a, well, this is beyond a gravestone, Judge. You wouldn't call it a shooting star, but a little bit long wick. But then we turn around and bounce right back up. So it's clear where the resistance is going to be 66.50. Moment. With me. So you can see here it's going to be 66.50 on the upside. And on the downside, let's go move into the 2 hour. Same thing, very, very tight. Look how tight this range is, which is understandable in light of the craziness we've experienced. Things that look how quiet now things are now. So that's what I'm saying. On the downside, I'm not expecting a whole lot. So we're going to see what we're looking for right now is you see where the touches are, where you're going to see areas of volume where people would step in, and you can see right here, right there. You see that now comes across here and here. So once again, you see right there. So that's what we're looking for support is going to be 65, 62. Let's look at the guppy. Well, we've had a decent rebound. I mean, this is honestly, this rebound isn't even that impressive. It really isn't. It looks like it is. It looks like, but come on, 10 handles. It really isn't because really, if you factor in starting rebounding and the yen weakening, or yen strengthening, it really isn't that impressive a rally when you see other pairs. So resistance is going to be right here, right at this close here. That's resistance. 33.66. And I will wait till the weekend before we update these right here. I mean, can't really call this bullish after this thing collapsed. Same thing with the cable. I mean, look at this. This thing collapsed all the way to 14. So what? We rallied. We did rally pretty strong, but to turn around and say it's bullish, it's not bullish. It's just a bounce. And really, it's a fabricated bounce because of the dollar selling we saw that was really impacted by the Fed. You know what I mean? So we'll take a look at those biases next week. Support. I don't know if it was Stelios or Steve, but I think it was Stelios. Said, I mean, someone said if it wasn't for the Fed stepping in, we probably would have had dollar index up at 150. I mean, the way things were going early last week, mid last week. Support is going to be right here. See there, come across there. So it's going to be 99.74. That's starting on. So I actually pulled this up now as opposed to the guppy, but I'll just go into that anyway. 99.74. While we're here, might as well just go and take care of this starting on. And on the upside, Boy, this is a one that's been in that very tight range on closes, and the upside's gonna be right there. 0142. Let's go back to the guppy because we needed to finish the support for the guppy. So no wonder I got this wrong point. Here we go. Right there. You see that? 32.18. This has been a pretty good move here in the euro dollar. If you look here, we actually have this is on a 2-hour chart. We do have a little bit of a greystone doji here. Look at that. So I guess if anybody was able to catch this was a nice area. If you got an opportunity to get short, look at that. That's a nice little greystone doji on a 2-hour. So it's not like as if it's on a 5-minute or a 15-minute. That's a 2-hour. Although the wick isn't that long, but certainly had a nice setup considering how far we'd run up. Oh, we're still going lower. We'll just take a quick look in the indices. Really frustrating because I've got these two gaps right in here, and that would not be such a big deal. But you can see this is right where the pair was finding support and rally. That's a pretty good rally. I don't know, rally like 40 handles. So great time, did not have data. Here it is right here. I mean, at least I've got here. And this ends up throwing my VWAP off. So probably won't even trade. I don't even like trading on Fridays anyway. I'm not sure how things are going to play out. We've already seen the market come off quite a bit from yesterday's rally, so, and look how quiet things are. So maybe we'll see the market clear back still a little bit lower. But this is, boy, that was just unbelievable yesterday. How we blew through this stuff. And it's amazing because you would have thought this type of move would have taken, about 3 days, maybe even 2 days. And it all did it all in one day. I mean, that's just amazing. I guess you could make the case that this kind of looks like a little bit of a head and shoulders. I don't know. I'm looking on the daily. A lot of people were looking for that move to 2620. I didn't think it was going to make it up. I mean, I wasn't something I was focused on because I was so focused on a shorter term. That wasn't an area that I really had much to think of, but you can see that was key. That's what got it with the double line here. I'm surprised. I wouldn't even have thought it would have made it that far back. And if it was, it wouldn't have been, it would have been something like I said, I would have expected a day later, if not 2 days later. And we basically did it all in one day. Look at that. I mean, think about this. We closed here with 24 something, and we rallied all the way to 26.20 by the close. And yesterday the algos were running roughshod late in the day. It was really tough. And I don't hold over sessions, but this would have been a good area to get short that we talked about, that 2620, because a lot of people are looking for that. And certainly you can see here on the on the 2 hour, I think it was. Well, yeah, we got this hanging man here. Although the wick wasn't that long, but that was for those that were didn't mind, selling into the session and holding. Seeing the same thing here in the NASDAQ. So I guess potentially we could come back down to 2530, potentially. But like I said, I don't like trading on Fridays. I mean, I might dabble a little bit, but I'm not really looking too much. But you can see here, losing this data really ticks me off. It wouldn't have been so bad if it happened in here. But you can see losing this whole entire 40 handle rally, and even impacts the VWAP too. So I doubt I'll trade. I really do. Not interested in giving back any of my gains this week at all. So that's going to be it. Thanks for joining us here on the European crossover webinar. Apologies for the delay with me having to reboot with the problems I encountered with Bookmap. And have a good day and good luck trading, and be careful today.